This is the gap, continue, and reverse E-mini S&P trading system for NinjaTrader 8. It can also be traded on the micros. We're going to take a look at the results of this strategy, the back test to 2007. These are all the trades based on one contract, 83.35 average trade profit. Higher average trade profit on the short side than the long side, less trades on the short than the long. And let's look at the equity curve. Here is the equity curve. You can see an acceleration in the equity curve from about 2016 forward, which means the average trade profit is higher as well during the time period from 2016 until now. Let's look at the annual analysis of this. Here is the daily. Let's look at the yearly analysis. And you can see here, let's put 2021 first. 7 trades in 2021, down 1,500 on the year. And then 2020, up 98K. Cumulative profit, net profit 27,350 on 126 trades. So you see in that situation you have almost $200 average trade profit and over $100 average trade profit in 2019, 12,000, 2018, 18,975, 2017, 54,37, and then the profits are larger in the more recent market environment that we are in, more volatility. You see the equity curve is not as defined as it is on the daily chart. So if you hit on the daily chart, you can see how well it's defined. This is the daily equity curve, and the acceleration of the equity curve from 2016 exists. And so let's look at more performance stats, and we'll go over the data and input settings. So let's look at the summary, and you can see once again drawdown 59.8750. And this does not include slippage and commission. And let's look at the data and input settings. So we are using the day session only. Some of our strategies we use the 24-hour session. We want to use the CME US Index Futures RTH, regular trading hours, 1-minute bars, and this is the back test of 2007. During automation, you don't need to go back to 2007. You can go back, as long as there's a trade or two. Historically, then you should be good. I typically go back 3 to 7 months in my back test. So those are the data settings. You need to focus on the data series, and the time frame should match mine. Chart style and visual below any of these other settings. Those are personal preferences that you can change that won't affect the strategy results. They're just the colors that show up on the charts. And so now let's go over to the input settings. These settings, the time-based settings, are set up to work on Eastern Standard Time. You do not need to change them for your time zone. You can set your computer to your time zone. I'm going to disable it so you can see these better. So I'm going to uncheck the enabled, select the apply. You can see it easier. You go in here, contracts, one contract. You can change it to a more conservative version by unchecking AGR, which is aggressive. It uses the don't trade if holiday function. It does not use max daily entries. You could use that. It has a monthly loss limit. Be sure if you use the monthly loss limit function that it doesn't use it by default, but if you use this by default, you need to have at least a month's worth of data. Then you have a stop loss on the long side, stop loss on the short side, which are the same. Then you have a profit target on the long side, which is 2,000, and a profit target on the short side, which is 500. What's interesting is the average trade profit is higher on the short side, even though the profit target is much smaller. The short side in recent years has been very short-lived, and so you can take short trades. They just don't last long, and you typically have to take profits much quicker, with a few exceptions. And then the exit times, the only time-based entries you see in this are the exit times, 16:14. For your exits, 1 minute right before the close. The open of the last bar, when there's 60 seconds left in the trading session, there'll be a market order to get out, and that's 1 minute before the futures close. And you can cancel your limit orders to the market. That's what I recommend. And stop target base price should be based on the strategy, not your fill. We don't want to change the exit prices based on where you're filled. We want to go with what was back tested. We want to base the exit signals based on the actual strategy signal. And then once you do that, you can match all these other settings. You can select enabled, select apply, and you see these will be grayed out. Then you can say OK, and then you see it calculating at the top. You wait for that to be done, and then you can look at the performance summary once again. So now you see the signals are there again. Once we re-enable it, you can look at the performance summary once again and see the back-tested results, historical, and 97,350. This is a strategy that was developed in Q4 of 2020. It was developed to take advantage of markets that have a gap continuation and then reverse to the upside. So for example, if I draw that on the chart, it's going to look like this. Gap down, you have a gap down right here. That gap continues, and the market begins a reversal pattern, and we get in. Not a lot of follow through on this day. Let's look at some other charts, and you can see a better example. And if it fails to follow through, if the market doesn't follow through, it can start shorting those gap downs. And so this just trades gaps downs. If there's not a gap down, it won't trade. And so you see here, gap down, continuation. The gap continued to the downside. So for example, the gap down, the open less than the previous day's close, it continued, started to reverse, but it rolled over. And so took the short trade because it failed to reverse to the upside like this. So if it rolls over, we go short. So this only trades if there's a gap down. And let's look at some additional trades. Here's another one that went short, another one that went long, another long trade that rolled over at the end of the day. Let's look at these here. Here's another one that rolled over. Let's look at some. Here's a profitable one. It was gap down, continuation, started the process, and this one was a nice trade in December. Here's some more trades. Let's look here. Here's a nice trade at the end of November. Another nice trade in November. These are just V reversal patterns. So you see a long trade here that failed, and then you had two short trades come in. So it can do that as well, especially if you don't limit the max daily entries. And here are a sample. These are the samples. So it does take some nice short trades, nice long trades, all based on the fact that there has to be a gap down to take trades in this strategy. That is gap continuation in reverse E-mini S&P.